Has anyone ever said to you as a trader, hey, I'm sorry? Because I think that this is probably something you should hear. I'm sorry that so many traders out there insist that their system is the secret system to unlocking the profits of the universe. And I'm sorry that a lot of traders out there think that if you don't trade a certain way, you're wrong. I'm sorry, because all of that is BS. It's not true. The reality is that there are lots of ways to trade successfully. Not only that, but there are many, many, many different ways that you can trade, even though you have certain biases and things that make sense to you. So let me give you an example. And here's the reality about this. If you want to get this right, you have to do work. It's not just the case where you can take what somebody does and duplicate it. You're not going to copy someone's trades to success. I mean, that just literally, I mean, have you ever heard of anyone in Forbes or whatever magazine? They say, how did you make your money? And they said, oh, well, I just followed these signals and made a big pile of money. Nobody says that because the reality is because you're interested in trading, you want to learn how to trade. And so and one of the things that I'm also sorry about in this trading world is that people make it sound easy. It ain't easy. Over 80% of the traders who trade CFDs and Forex, they lose. They lose money. And it's one of the reasons why I use these losing traders to define which direction I should go. And you can see plenty of videos about that, other videos where I talk about how to do that. But the important thing I want to get across here is that trading is work. And so the reason why I know that, for example, this kangaroo tail is like has yards over this kangaroo tail is from my work, from my testing. This kangaroo tail has no space. There's no room to the left. Immediately to the left here, the kangaroo tail would run into these candles. Okay, so there's no space here. Whereas this kangaroo tail here, immediately to the left, we have nothing but free range chicken land. I just made that up. I don't know why I thought that's funny. So look at this. Kangaroo tail, way, way, way to the left here. And I talk about all this stuff in the book Naked Forex. You may have read it. It doesn't matter if you have or you haven't. In the book Naked Forex, I talk about space and room to the left. And in the course, Small Accounts, Big Profits, which you can learn about by going to Big Profits course, we talk about this too. What makes for a good setup. So you can go to Big Profits course and learn about that. But the important thing here I want to get across is it's work. And I'll show you some of the work that we use to identify whether or not we're doing the right thing. So I've learned that, for example, doing the right thing by kangaroo tails is to wait for reversal kangaroo tails we're talking about here. Not the trendy kangaroo tails like this one, right? Or let's see if there's another, that one doesn't really have a lot of space either. But these ones will have minimal space because they're with the trend. But it's the reversal ones that you want to see have space. Okay, this one has space right here, but this one's a terrible placed one because guess what? It's on a Friday. And I know it's on a Friday because it gapped open on Monday here. So Friday kangaroo tails are absolutely awful, as are Monday actually. Tuesday, Wednesday, Thursday is where you want to be. But let me show you how we would take the data from backtesting and Forex Tester, kangaroo tail data or whatever, to determine whether or not we should risk a certain percentage. So in the Small Account Big Profits course, which you can learn about by going to bigprofitscourse.com, we talk about this idea of compounding your wins. So in the course, we're taking $1,000 and we're ramping it up over 300 trades. What you want to do here is you want to have a look at kind of like what's likely to happen. And the way that you can do that is by plugging in your account size, which in this case is a small $1,000 account, your reward risk ratio, your win rate, break even trades, how many trades you want to compound, and then what's the risk here. And what you'll find if you run through spreadsheets and things like this is that, look, the max balance here, I love it, 20.3 billion. You are not going to be trading 20.3 billion in the retail world, that's for sure. But anyway, the point there is that you want to figure out like what's likely to happen. And when we run through this, you can see here that it's after about what 176 trades that the account gets to 5 grand in this case. This is just one hypothetical run. We don't know if this is going to happen in the future. In fact, it's likely that it won't. And then after about 200 trades, we hit 10 grand. And then after about, here you go, 287, oh, 200 and, actually 279 trades, it hits 100 grand. And that's why we say in the small account big profits course, we're looking to make 100 grand from this little measly $1,000 account over about 300 trades. Could be more than that, could be fewer than that. But the important thing to keep in mind here is that we've done the work, we've run the data, we know what could happen based on these sorts of Monte Carlo simulations, and we have these spreadsheets in the course and all that. So you'll get all that when you join the course. But look at this. It spends a whole lot of time losing money too. Like it doesn't really go much beyond 2 grand over the first 100 trades. So isn't that interesting? It doesn't really crack the 2 grand barrier until over 106 trades. So these are the sorts of things. And you have like if I didn't know that, would I give up on trade number 80? Maybe. I'm like I've only made $259 and I've had 76 trades here. This isn't working. I need to quit. If I had quit, do I quit there? If I quit there, guess what happens? I never live to see the account get to 10, 30, 40, 50, and then finally over here 100 grand. So that's the reality here is that trading is work. Psychologically, it's difficult to endure the terrible drawdowns, especially when you use an aggressive risk management strategy like what we're using in small account big profits. So I hope that this helps. I hope that you understand that the importance here of using things like spreadsheet tools and working on your psychology because working through the drawdowns and understanding and anticipating the drawdowns, that comes down to two things: the math that you will see running Monte Carlo studies and the psychology of building up your immunity to these terrible times when we have a bunch of losers in a row. I hope that this helps. I hope that you click the link if you want to learn more about the course. Otherwise, wish you happy trading, and we'll see you in another video. Take care.